Welcome back. Today is December 20th, Sunday, and on this post, I'll be sharing with you YFI, Yearn Finance, YFIUSD, and DFI, YFIUSD. See what has changed since the last time I have talked about these two markets, and I'll be sharing with you my bullish and bearish case scenarios with you today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before we begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks instead of 3 upon a successful sign up and qualifying deposit, and will also receive a referral bonus if you guys sign up under me. Please do also read my full disclaimer below. I am not a financial advisor. This is not financial advice. I'm purely sharing my own speculations opinions on this market. I cannot tell you the future, and you should always do your own due diligence for trading or investing in this market, as it is extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below. I will get to them a lot faster that way. Now, see what exactly is going on in the markets first. Bitcoin dominance. Not too much has really happened in a very tight range for Bitcoin dominance. Bitcoin price action pulling back quite a bit since it hit over 24K. Now, when Bitcoin dominance trends upwards, I'll be a little more cautious, especially when Bitcoin price action is pulling back. That could take quite a bit of altcoins down with it. So these two factors I will be paying very close attention to, no matter what altcoin market I am actually taking a look at. Now, see what exactly is going on in Yearn Finance YFIUSD first. Since the last time I have spoken, I did mention that on the 4-hour time frame, there was an ascending triangle pattern, and the measured target of that pattern was about 31.2K, okay, about 31.3K. Now, that price action is not reflected here on the 4-hour time frame, but I did mention yesterday that the price target of that should have been considered to be reached, even though it was not completely reached, because on the daily time frame, I did see that the measured target, the wick here, is at about 30.4K, so pretty close. And congratulations if you guys have actually taken any profit from that. So I'm going to get that pattern out of the big chart right here and see what exactly is going on here more clearly. On the daily time frame, I did mention that we do need a daily candle close on top of 30K here to actually negate this possible head and shoulders pattern. It really looks like a head and shoulders pattern, even though I can only get one candle wick to connect here on the right shoulder right here. But it looks like an inverse head and shoulders pattern inside a rising wedge pattern, so both are bearish patterns. And one way to actually negate this head and shoulders pattern is to actually get a daily candle close above the 30K level. Otherwise, it really does look like these two shoulders are in parallel with each other right now. So that could be dangerous. So what I'm going to be keeping an eye out on is if either price action is going to stay above 25K at least. That's pretty close to the bottom trend line here. Otherwise, this trend line, as you guys can see, has been tapped quite a few times over the past couple of days. So I'm not sure if it's going to hold this time. So I think an easier scenario for me to actually look at is, of course, get a daily candle close above the 30K level. And there has been quite a few rejections and a few attempts, of course. So I think both the bottom trend line here and the 30K level here has been attempted more than a few times. Let's see which one is going to break first. Now, let's take a look at the daily time frame as well and see what exactly is going on with the candle patterns here. It does seem like the candle patterns, at least for decreasing price action, that the seller volumes are at least coming in lower. However, gotta also be taking into consideration that it was the weekend. So let's take a look at the weekly time frame. On the weekly time frame, at least for the past 2 bearish candles, at least tells me that this could be heading up higher, because on the past 2 weeks candle, I can see that the sellers are unable to continue pushing the price downwards, at least comparing this past week's candle with the previous week's candle. Okay, the previous week's candle went as low as about 21.7K, while the just this past week's candle close actually went as low as about 23.1K. So in this sense, it's still kind of ambiguous at this point because, like I said, the bulls have attempted 30K a few times. The bears have attempted to break the bottom trend line a few times. And looking at this weekly candles, at least for the past 2 weeks, it tells me at least the bears were not as strong for the past week. But I think all in all, I'm still looking for a daily candle close above 30K. Otherwise, this does seem to look a lot more like a head and shoulders pattern, and even a rising wedge pattern that does not take a third swing at the top trend line here. So something that I'll be very cautious of, because if this bottom trend line breaks, then the next level of support I'm looking at is going to be, let's see, the 50 simple moving average here is about 22.5. The 3-day 21 simple moving average is about 21K. So quite a bit of support below the bottom trend line here. But as a short-term trader myself, I would very much consider if I should stay in the position or not if a key support especially is broken. So you guys let me know what you think and how you guys are strategizing this. But there's still quite a bit of support below the 25K level, but that is just my perspective. Now let's explore the bullish and bearish case scenarios for Wi-Fi. The bullish case scenario, of course, I am still looking for a daily candle close above the 30K level. That would tell me that at least for this swing, it's not going to break this rising wedge pattern, and it would invalidate this head and shoulders pattern. The bearish case scenario, if the price action here actually breaks below the 25K level, I'll be very cautious then, because it will approach the bottom trend line and further could actually validate this head and shoulders pattern and possibly breaking this rising wedge pattern. Then the next level of support I'm looking at would be the daily 50 simple moving average. I think there's quite a few others as well. The 12-hour 200. So quite a few between 25K, the bottom trend line, and 20K level, but still, that's still quite a bit of a drop. So this concludes my very short analysis of YFIUSD. Let's dive right into YFIUSD. So for YFII, this one has not really changed since the last time we have spoken, which was about last week. It's still running within this falling wedge pattern. I did adjust the falling wedge pattern to include some of these wicks that have happened over the past week. And if this falling wedge pattern actually does break out, let's say within about 3 days, then the measured target, let's do a remeasurement here. Conservative measured target, if it breaks out within the next 3 days or so, it would take the price action to about 2,800. Okay, let's see if there are any support levels that's right underneath the price action right now. I think it's right below the 3-day 21 simple moving average now. So that seems to be the last level of major support. Not on the daily, and not on some of these lower time frames as well. So I'll be keeping an eye out on the 3-day time frame, on the 21 simple moving average, on the YFII charts. So bullish case scenario, obviously, if the price action breaks out of this falling wedge pattern and continue towards its measured target, may or may not be reached. I think there's still quite a bit of moving averages that could act as resistance between the breakout. Let me see if I'm wrong. Yeah, there's a 12-hour 200 simple moving average that could act as resistance even after the breakout. So something to be looking out for. That is the bullish case scenario. Bearish case scenario, if there's a close 3-day candle close below this 21 simple moving average, that look very bad. That could tell me that the price action can continue down towards this falling wedge pattern some more, or could even possibly break the bottom trend line. Now, this concludes my very short analysis of both YFI and YFII. Let me know if you guys find it helpful. Give me a thumbs up if you guys did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you guys manage your risk carefully. And if you guys would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.